Hello, welcome to Modern Wall Street's Trader Talk. We are in Rally City as Janet Yellen testifies before Congress and ahead of earnings season. Joining me, of course, is Peter Tuchman from QMS. He's going to tell us the good word. Hey, Peter, thank you for joining me.
My pleasure.
Good morning. Well, we are having the big kahuna, Janet Yellen, testify on Capitol Hill, and I'm sure they're grilling her about interest rate hikes, considering the mild economic data and inflation. But what is of value to investors in her testimony?
So I think the most important thing the market is really looking at is how fast they're going to unwind the balance sheet. Okay, market's up 140 points. Okay, I think there's a 50-50 projection on whether interest rates are off the table or not for September. Economic data seems like, and the market is showing us that it can sustain a rise. Okay, but we're still talking interest rates are. We're talking about these quarter point moves. At the bottom line, interest rates are at a point that is just really low. We've been in a fog for all these years with zero interest rates. There was a time in the 80s and 90s where at 16%. So net at the end of the day, 1% is not a big deal. They raise it up to 1.25. The market can sustain it. It shows us that. I'm always a firm believer. The market at the end of the day tells us what they think about all this information. Is there an interest rate on the table? Yes. Could she change her mind? Absolutely. The market will not change her mind now because it's up. But the whole talk about unwinding of the balance sheet, unwinding into strength, seems to be working.
Well, last I heard, rumor has it that Trump is looking to replace her with Gary Cohn, and the administration also announced that they are to delay the August recess to focus on the agenda. So how can we be clued in on their progress?
Okay, so I think we need to look at yesterday's day trading. Okay, so we've been sort of flatlining at this level, 21.4 in the Dow. The S&P seems solid. Okay, we haven't had big volatile moves over the last few days, except for yesterday. Nothing has seemed, in my view, headline-wise, to really drive this market up or down about what's going on in the administration, the G20, Trump and Putin. That didn't really affect the market at all. And at the end of the day, it doesn't affect the market. But what we saw yesterday was, in the morning, the market sold off really hard on the release of the Donald Trump Jr. emails. So in my opinion, we're seeing headlines don't drive the market, but when we cross the line from sort of accusation to potential criminal activity, which is what they were talking about, market reacts to that. We saw a huge precipitous drop in the market of almost 100 points at 11:04 yesterday morning. Okay, but it didn't stay there. It was a sort of an emotional impulse of, like a very large character hitting the button, right? It never stayed down there. If that was a significant move, it would have really followed through. We've not seen any of that. Market rallied all the way back, and then at 2 p.m, news came out that they postponed the August session. No, the August that they postponed their vacation, yes. Right? So that meant the agenda was back in play, and the market rallied 100 points. So that to me just sort of signifies that the liquidity in the market is thin. It is July. It doesn't, I don't feel like we're in the middle of summer, but we are. So that's sort of a thinner market so that you can really see those drops and those pops. But we're not sustaining drops. We are sustaining pops. And after that rally back from yesterday's low, we're up 150 points on this news that she's going to start unwinding this year significantly, which you would think sometimes would be not such great news. But the market is just loving it. It's amazing.
And on the topic of that, we have some major bank earnings at the end of this week. That department has been Rally City as well. So how can we determine which ones will continue rising?
So what we saw since you and I spoke, or over the last couple of weeks, we've seen sort of an arrest of the major rally in techs, money coming out of that market and coming into banks again in energy. So while in the beginning, since the election, banks were one of the initiating parts of this rally, they did level off and sell off at points, depending on whether Trump's agenda with banks and regulation were going to come through. And now they're back in play, right? They are the flavor of the moment, right? So that's a good thing. They are the bread and butter of this market. You get a financial rally, you can take a market up 150 points. So today's rally, I think, is Fed related. Friday, depending, projections for Friday are that earnings in banks will be good.
Well, Peter, it's always nice to grab you on the floor, especially on Wednesday in the middle of the week, giving us the good word. Thank you so much, and can't wait to see you next week.
Thank you. Good to see you.
So much.
Bye, guys.